Hello and welcome to Ticker Tapes. Today we're back in the world of ETFs. Equity markets seem to have taken a turn for the better this week following comments from the Federal Reserve Chair Jerome Powell, who appeared to calm investor fears over the pace of future interest rates in the U.S. The equity rally reminded ETF investors just how hard it is to time the market. $2.67 billion left QQQ, the Invesco NASDAQ 100 tracking ETF, in the last week, just ahead of a 2.6% rally in the Technology and Growth Index. The sellers of QQQ left almost $70 million on the table for somebody else to scoop up. Interestingly, as money was leaving QQQ, funds were flowing into the S&P 500 tracker, SPY, and into IWM, the iShares Russell 2000 ETF. The two broad-based index trackers saw inflows of $2.1 billion and $1.57 billion, respectively. IWM has added 4.4% over the last 5 trading days. That's a promising bounce. However, the ETF remains down by almost 18% year to date. Natural gas ETFs have continued to be among the best performers in the ETF universe this year. For example, UNG, the U.S. Natural Gas Fund, is up by a whopping 127.7% over the year to date. However, there is a question mark about whether we have seen the best of natural gas ETFs, as the price of UK and European natural gas contracts have gone into decline. European and UK natural gas prices have more than halved since the start of the year, whilst U.S. prices have recently started to trend higher once more, with the spot price rising by 12.44% in just 5 days. This smacks of a short-term squeeze, and if we look at gas prices for delivery in June 2023, we find that they are trading some 85% lower than the current Henry Hub spot and front-month futures prices. A discount of that size suggests that one set of prices is wrong and that something will have to give going forward. Despite Aramco, the Saudi Arabian state oil business, becoming the world's largest company in the last week, knocking Apple off the #1 spot in the process, investors were heading for the exits as far as the Saudi equity markets were concerned. Two of the worst performing ETFs in the last week were KSA, the Saudi Arabia iShares ETF, and FLSA, the Franklin FTSE Saudi Arabia ETF, which fell by 6.94% and 6.33% respectively. ETFs that track stock prices in Kuwait, Qatar, and UAE have all sold off over the last week, which feels counterintuitive given the 6% rise seen in oil prices over the last 5 days. The turmoil in the crypto markets hasn't deterred Grayscale Investments, which has chosen to launch its Future of Finance ETF in Europe. Grayscale will list the fund in both London and Frankfurt next week. Quite what the appetite will be for a fund that has fallen more than 40% since inception remains to be seen. However, with Bitcoin bouncing by 5.5% in recent days, investors may feel that this represents a decent entry point into the fund and the Bloomberg Future of Finance Index that it tracks.